Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 25th of April 2019. I'm Darren Sinden, and you can follow me on Twitter throughout the day by using @ds_Pepperstone. Okay, let's have a look at the overnight changes and price moves to be aware of. And really, I think the main feature of today is the absence of major price changes. Largely flat and quiet markets on the foreign exchanges overnight. That means that we found a certain amount of stability, some flaws perhaps in currencies that have been weakening. For instance, the Australian dollar steady overnight, up by 0.02%, but not losing any more ground against its US rival and staying above that key 70 round number, although obviously still down 1.86% over the course of the last week. The yen was moving, strengthening against the US dollar to trade back below 112, 111.95 dollar yen shortly before we recorded the video, and the dollar giving up, as I say, 0.19% against the Japanese currency there. No movement though for the dollar against the Swiss franc. The Swiss franc, of course, had been losing ground to the US currency over the last week or so. You can see it's down by 0.48% against the US dollar over the course of last week, and the Swiss franc has given up 2.61% over the last 30 days as well. Dollar index for its part off the top, down by 0.12% as we start the day. The dollar also giving ground against the South African rand, which has clawed back 0.17% against the US currency, though the rand still trading with a 14.39 handle. 13.90, which we saw just before Easter, does seem to be a bit of a memory for the moment. As you can see, the dollar has taken 2.51% off of the South African currency over the last 7 days. Okay then, what's on the calendar? Events that may move the markets today. We're topped and tailed really by Japan and their data today. So we've already heard from the Bank of Japan and its monetary policy statement and interest rate decision, and a little bit more on that later in the video. There's nothing really of note this morning, so we have to wait till 12:30 GMT for the first of the high impact data for the day, and that is continuing and initial jobless claims out of the USA. That's to say at 12:30 GMT. That's accompanied by the durable goods data for March, a chance to see how much American business is spending and investing on itself. That data, as I say, for March comes with and without defence orders and transportation, if you want to break it down. At the same time, 12:30 GMT, we shall have the day's central banker speech, and this time it's the ECB's De Guindos that will be sharing pearls of wisdom with us. And then another significant pause now until 22:45 this evening, when we cross over the Pacific for trade balance data for March of New Zealand. That of course includes a breakdown of exports and imports into the country for the month of March. Then 45 minutes later, we're back in Japan for the unemployment rate for March, alongside the job applicants ratio. And then at 23:50 we'll have Tokyo's CPI, fresh food data, and the consumer price index, the broader measure for the month of April. Tokyo's inflation is of course a decent proxy for what's going on in the rest of the country, and that'll be accompanied by industrial production data, if I can even say that, for the month of March. It's a preliminary reading there, and also retail trade data for the month of March as well. So a good look at the Japanese economy at 23:50 GMT tonight. Okay, breaking news and comment then that's caught my eye overnight. First of all, South Korea's economy has unexpectedly slowed in Q1, with GDP growth of just 1.8% on an annualised basis. That was much lower than the prior read of 3.1% seen in Q4 2018, and the market's forecast for growth of 2.5% in the first quarter. The Q1 data, in fact, was the weakest print seen in the country since Q3 2009. So I think people are talking about slowing business with China and global trade generally being the crimp on the Korean economy. We'll have to hope that that's a one-off and not to be continued into the second quarter, but certainly something to keep a close eye on from here. Meanwhile, staying in Asia, the Bank of Japan has left interest rates unchanged and said it would continue with its stimulus program out to 2020 at least, in a bid to boost inflation and growth in the country. Of course, as we know, QE appears to be having a diminishing return in Japan. Perhaps the Bank of Japan will have to come up with some additional strategies to try and boost the economy, or maybe the government of Shinzo Abe will have to do its part, or play a bigger part, I should say, in stimulating the Japanese economy. Meanwhile, President Macron of France will announce a list of reforms today aimed at quelling the yellow vest protests which have rocked the country for many months. The announcement was due to be made before Easter but was cancelled following the Notre Dame fire. So let's see what Mr Macron can do to placate the protesters who are turning out on a more regular basis in the country and out, not just in Paris but elsewhere too now, of course. Okay, food for thought, something to take away with you into the trading day and beyond. And why not think about this? UK government finances continue to improve despite the Brexit uncertainty. Borrowing was down by more than 17 billion in figures released yesterday when compared to the same period in 2017-2018. And revenues for the government were boosted by an additional £34 billion, thanks largely to higher tax and national insurance contributions. The table on the right hand side just shows a breakdown of where the extra money is coming from the government, and as you can see, income tax, value-added tax and national insurance contributions are among the biggest items, growing in the case of income tax and VAT by over 1% in each case. What that suggests is that fuller employment in the UK is creating a positive feedback loop with more people working and more people paying tax. It's also good to see that UK companies are paying a bit more corporation tax and tax on dividends and other interest items as well. They're making a decent contribution. So despite the problems with Brexit, the government finances continue to improve, and that may mean that the Chancellor can spend more money in his autumn budget on goods and services to boost the economy further. Okay, it's risk warning time. Please do take a moment to read this risk warning, because trading CFDs and foreign exchange on margin can be a risky business, and leverage products are not suitable for everyone. If you're in any doubt about those risks or the suitability of leverage trading for you, then please do contact your Pepperstone account representative, and as I say, please do take the time to read this risk warning thoroughly. Thank you for your time today.